Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Well, today it was pure outright ugly, or as I would say, everything got absolutely kabooshed. It was a bloodbath from the get-go. At one point, the S&P futures were down over 320 points, and the NASDAQ was down almost 900, 950 to 1,000 points. It was really a bad day here. Now, just going back to yesterday, after we had this big spike up and the S&Ps pushed up to that 5520 level on the S&P futures, we erased that entire gap from the daily lows all the way up to that 10-bar moving average. And normally that's what happens when you get a big aberration, because my number is on my daily is 50 and we were over 500. And I'll show that to you. And we erased all that. But, you know, the tone was that President Trump put a freeze on the tariffs for 90 days, but he still went after China. Now, granted, you know, and then he upped it to 145% tariff for China. But overall, it was just something I didn't digest. I don't think the market's digesting this too well, and they're not absorbing this. And today, boom, the S&P's at one point today, we're trading 51.46. The volatility is still here. It's insane. And I'm going to show you. They go from the opening all the way down to 51.46. Then from 51.46 up to 5,300, down to 51.80. A beautiful triple Lindy from 51.80 to 51.80 up to 52.60. And then they drifted eventually up to 53.50. And then at 2:45, monster pattern, the 15 and the 30-minute time frames, everything kicked in. Boom, they dropped 100 points. NASDAQ futures dropped close to, about 400 from 2:45 on. And it was just unbelievable. The patterns today were absolutely amazing. Apple reversed to sell. Every rally we had, I think, 10 to 15 shorts in Apple. Every short, monster gains on the short side. So let me just show you exactly what happened today. And I'm going to bring up the chart on the S&P futures, but the first thing I'm going to show you is the daily, okay? All right. So coming into today, I knew that we rallied off the lows here, and we went right into the 10-bar moving average. When we were printing these lows here, 48.71, that's the pre-market in the overnight session on Sunday morning. But at that point, we were about 450, almost 500 points from the price to the 10-bar. Well, we hit that yesterday. Look at the negative MACDs on the daily, and I'll bring up the weekly. And this is what really stalled the market out here, okay? When you're pushing up like this, all right, when you're pushing up like this into the negative MACDs on the daily and the weekly, it erased the gap. Now, if these dailies ever reverse back down, we're going to probably, be in this range here, 4,800 to 5,300 for a while here. So again, you see the negative MACDs here. The ADX is rising. The big number here, all right, is the monthly, where we need to 54.86 by the end of April, okay? If we close below 54.86 on April 30th, the whole trend reverses from up to down, all right? Up to down on the monthly, all right? Let me just go and show you today what happened. I'll bring up the 5-minute time frame, and here's the 15-minute time frame. Now, at one point today, the 30-minute time frame, look at this KABOOSHED all the way down, 11:15 all the way down, right? And then finally, at one juncture, when the S&Ps were trading 51.46, you can see the price to the 10-bar moving average right here was exact 53. Where is it? The the 10 bar right here, we were roughly the 52.90. We were about 100 handles away from the 10 bar weighted moving average right here. You can see we were probably around the 52.85. So when the S&Ps were pushing down here, they had a monster rally. The 15 and the 30-minute time frames were in single digit. A 1 and I think a 2 on the 60-minute time frame. Monster oversold. We got a rally from 51.46 and change all the way up to 5,300. A monster move. Monster move. Look at that. 5,300. Look at that move. In 1 hour, they ran about 154 points on the S&P. All right. Then you got the 15-minute time frame to get overbought into the negative MACDs, and they got kabooshed all the way down to 51.86. Now, on this pattern here, I'm going to bring it up on the spiders. This was what's called a triple Lindy, a beautiful pattern. So this is the pattern here on the 15-minute time frame. Where is this now here? When I walked in here on the 5-minute. This is the pattern right here. So here's the push up to 5,300. And then this pattern right here was what's called a buy divergence in a negative trend. That means that the 15 to 30 and the 60-minute time frames are in sell mode. And this pattern here was called the triple Lindy. You got oversold condition into the positive MACD, right? And the 15, 30, and 60-minute time frame. Now, normally what the triple Lindy does is it pushes up to set up the short on the 15-minute time frame. But in this case, when we got the push up, it got the push up on the 15-minute time frame, and it did. It rallied from 51.80 on the S&Ps. Look at that, 527 on the spiders. Look at that. It ran 150 points from 51.80. Okay, look at that time, 125. Look at that, 150 points on a triple Lindy. Never in my life did I ever have that. Okay, that's how insane these moves are. All right, here's another 5-minute. Now the 15s reverse to buy. So when the 15-minute time frames reverse to buy, as they did on the spiders, right here at around 2:30, the 15-minute time frame reversed to buy in the spiders, the Qs, the diamonds, Microsoft, what else? Avago, Coinbase. I knew that the lows were in for the day. I knew that the lows were in for the day when the 15-minute time frames reversed to buy, especially that late in the afternoon. But when the 15s reversed to buy, no problem. I kept on shorting every high on the day, not because of the 15-minute time frame reversing to buy, because of boom, the 30 and the 60-minute time frames were in sell mode. You can see it right here. Every new high, there was a short. Okay, for those from my community, you can see here the 15s reversed to sell. Now, this pattern right here, all right, the one I was telling you about, the one that got down to 51.80. I saw the 60-minute time frame getting deeply oversold, and right here into a positive MACD. All right, and this is exactly why I saw the lows happening that morning. Okay, so right around the 1:30 time period, we got the real big push down, and then that's when we got the big explosive rally from the 51.46. All right, and we got that big push up, oversold into the positive MACD. But then when I got the big push up, and then we got the 30-minute time frames to get overbought at 245. At 245, I said to everyone in my community, I told some big hedge fund, I said, listen, the 15s and the 30s are setting up. I mean, the whole world was a short. The S&Ps were trading 53, 51 and 3/4, 50 I think that was a high, 53.51, 53.50. We dropped in literally in an hour and a half, right? An hour and 15 minutes. We dropped 100 points on the S&P. NASDAQ dropped close to 400. Names like Avago was trading and dropped about 6 or 7. NVIDIA dropped 2. Meta dropped about 15. Coinbase dropped about 4. MSTR dropped about 10. And I'm going to show you these patterns. So everything I do is based upon combination methodology, but everything I do is based upon sequences. All right. So after we got the big sell reversals yesterday, okay. Today the 15s and the 30s and the 60s reversed to sell. Right here, you can see right here the 30s and the 60s reversed to sell at 11:30. The strategy is eventually to short the first bounce on the 15. That dropped. Perfect pattern in NVIDIA. I'll show you the pattern in NVIDIA. Everything reversed. NVIDIA, Avago, AMD, Tesla, Meta, the whole world reversed to sell, right? When we got that print load, and then everything reversed at 10:30. First sequence of events, you short the first bounce on the 5, second bounce on the 5, third bounce on the 15, and then the fourth bounce, the 15s and the 30s. That's exactly what played out today. I wrote this. These patterns repeat themselves over and over again. So when we got the bounce at 245, just throw a dart, as I said. Okay. Avago down 6 or 7. Tesla was trading 256, dropped 10. Meta 14. S&P's down 100. NASDAQ down 400. These patterns, NVIDIA down about 2.5, 3. Eli Lilly was trading 730, dropped 20. All these patterns, everything aligned. I said the 30-minute time frames are going to kaboosh them. When they start rolling over and getting overbought into the negative MACD, as you see right here, look at the negative MACD. The 30-minute time frame is getting overbought into the negative MACD. Look at NVIDIA. First, right here, NVIDIA, boom, 08 drops to 05.5. Same pattern, identical pattern. You can see here the 60-minute getting oversold into the positive MACD. But when everything reversed to sell, and you can see here, I'll bring this up to the 30-minute first. And then you can see NVIDIA on the first bounce above. We were shorting NVIDIA above 110. Look at the bounce on the 15-minute time frame right here. First bounce on the 15. You can see the 30 reversed to sell already. You can see here's the first bounce. It was right around here. It was right around the 10 level, 90 level. And NVIDIA, boom. Look at that. $4 in NVIDIA. On the first bounce, getting overbought into the negative MACD above the pivot. Monster short there. Okay? And so when you see that pattern, okay, then the next sequence of pattern is to short the 15s. Look at Avago. Look at Avago. We were shorting Avago above the 76.5. Avago, boom. Look at that, $8. MSTR, same pattern. First bounce. Look at the 30-minute, overbought. 15 overbought. Look at that. MSTR, 78. Boom, kabooshed. 11. Here, I'll bring up Avago again because I didn't point out the right one. Here's the 30-minute, overbought into the negative MACD after the 30-minute reverse to sell. Beautiful pattern. The 30 and the 60 reverse to sell. So you have what's called a sell disconnect, sell divergence, and a sell disconnect. The 30-minute, overbought. Unbelievable. Apple. Look at this Apple. Unbelievable. Apple reverses to sell on the 30-minute time frame. But we were calling shorts in Apple and all the 5-minute overbought conditions along the way. But look at Apple. When Apple hit this 192.80, look what Apple did at the end of the day. Dropped $4, $5 at the end of the day. Apple off the 30-minute time frame. What I'm showing you here, Coinbase, it had a short in Coinbase on the highs right here. Again, 30-minute time frame. I was shorting Coinbase above the 72.5, 73 level. Look what Coinbase did. Kabooshed. Look at that. $6 on Coinbase. Okay. So what I'm showing you here are patterns that repeat themselves based upon my methodology. And this is how I teach everybody during the day. And I talk to big institutions, family offices, prop firms as well. But for me, this is what I do when I spent nearly 10 years of my life building this, to be able to share it with you, to teach you how everything I do is based upon what's called combination methodology, to be able to take the knowledge I have, the technology I have, and then combine it and to guide you and educate you, and to be on the right side of the market, to be consistent every single day, and to be able to trade markets that especially have significant volatility. It's about one thing: being consistent, wanting to learn, okay? Being able to put the time in, the effort, be proactive, ask questions. I have to sometimes, I must say at least during the day, anybody have any questions? Does anybody new have any questions? Okay? It's really about being proactive and wanting to learn, taking the time to do this. Everything I do is based upon dynamic learning. Everything I teach is based upon visualization and repetition, right? I'm going to be hosting a very big webinar. I'll be announcing, I think it's going to be Monday next week, Monday or Tuesday next week, and I will let you know tomorrow. Okay, so I will be sending out a link as well for that. But again, the markets move very, very fast. You can see a move, boom, 51.46 up to 5,300, 5,300 to 51.80, 51.80 to 52.30, down again, then up to 52.50, 52.50 down to 51.35 at the end of the day. I'm sorry, 53.51, 53.51, all the way down to 52.33 at the end of the day. And then from 52.33, caught the long, boom, and it rallies 90 handles at the end of the day. The markets are moving. If you're a beginner, fear not. This will calm down, but it's also teaching you the patterns as they happen. And a lot of people were asking today about the patterns and explaining the combination methodology, the 5 conditions in the market, all using my 15, 30, and 60-minute time frames. Once I knew the 30s reversed to sell, once the 15s reversed to sell, then the 30s reversed to sell today, I knew the highs were in for the day from yesterday. I knew no way in hell will we touching that 55.20 level. Okay, now volatility is here. We'll see how long it lasts. However, I am a buyer of the market. Okay, if we do get another push down to new low to the lows, if it hits the 48.50, 4800, 47.50, I don't care. Now that might be a problem if the monthly reverses, but eventually I think there's a good base here between 46.50 and 48.50. And I think that you'll have your rallies. You'll be in a tradable range until that MACD on the monthly chart gets below my pivot line. And then we go all the way back up to 6,500, 7,000 the next 8 to 14, 15, 16 months. Okay. Now, still great opportunities to trade the market intraday. Still great opportunities to trade. I got so many people trading the TQQQs, the SPXLs, Palantir, SMCI, they're trading NVIDIA, NVDL. It's phenomenal moves in the market. Phenomenal moves. Again, so today, gold up 111. Let me show you this great pattern in gold today on the 30-minute time frame. Look at gold, the GLDs. I'll bring up the 30 and the 60. Now, again, when you trade the gold futures, you really need to look at the underlying ETFs during the U.S. session. Now, this here, the gold futures, the GLDs, forget about this. The low was 290.50. So it was somewhere like around here, somewhere 290.50, right around here. That's where the print was on the gold. This is a bad print, bad tick. So gold, you can see on the 60-minute time frame, the GLDs were bullish. On the pattern that I'm talking about, on the push down, the ADXs are rising, the positive MACD, huge buying pressure. Geez, this is bad. But I'll take a picture of it and maybe I can post it on X. This is really wrong. And then it pushed up. Either way, gold on the GLDs rallied over $2, which is $20 on gold. Oil, big problems in oil, down over 3.46%. If you look at oil, the problem started when the USOs all started to reverse to sell on the 30-minute and the 60-minute time frame. Again, the positive MACDs really gave oil a cushion here. That's why oil ripped off the lows. Oil at one point was trading at one point right here on the lows 58.76, and oil ripped off because of that 60-minute time frame on the USOs. Really great short on oil off the 15-minute time frame after they all correlated. And here was the first bounce on oil this morning. Oil right here on the USOs 60.42, and you can see the drop here. Oil dropped over 50 cents based upon this pattern, and then it caught another great short here at the end of the day, 60.48, and oil dropped about another 40 cents on oil. Big move. If you could say you caught 30, 40, 50 cents on oil, that's pretty big. All right. Again, great patterns here. Apple down 8, Meta down 40, Nvidia down 7. We're not out of the woods. I think, again, I'd like to see one more big flush down, and then I think you back up the truck. All right. Now, again, if you're a long-term investor, you're going to have to bear with the volatility here, but eventually things are going to play out. I think the president is going to make a deal with China. It may not be tomorrow. It may be in a few weeks. Tomorrow we have the PPI number, but again, these patterns are very, very powerful. That I said the 15-minute time frame is going to set up between 12 and 2. We got the push up around the 130, push down, and then we got the 245 bounce. That was just absolutely amazing. When we were pushing up to 53.40, 53.50, I went like this. I saw my 30-minute time frame. You went from a 1.10 oversold condition to a 96 overbought condition on the 30-minute time frame. I immediately told my community, I told the big hedge fund I talked to, I said, they're going to drop. They're going to drop. Overbought. First bounce on the 30-minute time frame after the 30-minute reverse to sell today. Overbought into the negative MACD on the 30-minute time frame. This is an absolute Picasso. An absolute Picasso. Just take a picture of this right here. 30 reverses to sell. You short the first bounce. Look at this. 529.71. Boom. Almost 90 handles on the S&P. Overbought into the negative MACD. So here you have what's called a buy divergence in a negative trend. Here you have a sell divergence in a negative in a sell disconnect because the 15-minute time frames reverse to buy. All right. Now, there's so much to teach each and every one of you. I love what I do. I can't wait to even come back tomorrow. And for today, it was just phenomenal patterns. All right. When I get back, I'll tell you what I expect for tomorrow. So tomorrow, 8:30, we have the PPI number. Now, really unusual that the CPI number came in a 10th better, 2.4 versus 2.5. And next thing I know, the market didn't really react to it much. The market was really reacting to the tariffs on China. Now, this number is probably going to be better than expected. You don't get the CPI a good number, a 10th better, and the PPI up. Okay? I really haven't seen that. They really are like brother and sister. So even if the PPI comes in better than expected tomorrow, the overhanging burden here is, number one, is people want to go long over the weekend with the news in China. Can it get worse? Can it get better? Is China going to retaliate? Is this going to be a real big trade war type of event? I doubt people want to go home long over the weekend, okay? That's one. Do I think the PPI number is going to be better than expected? Absolutely, okay. For tomorrow, because the MACDs on the 60-minute time frame are bullish, meaning they're positive, yellow over blue. If the 30-minute time frame gets deeply oversold in conjunction with the 60-minute time frame, I mean, they're going to have to drop pretty heavily. They have to drop like more than 100 points on the S&P, probably another 500, 600, 700 on the NASDAQ futures. If that happens, I'm a buyer. I think those MACDs on the 60-minute time frame, and I'll show them to you here. Okay, I think the 60-minute time frame, the MACDs. So here's the low for today. And if we do make a new low, just say we make a new low, if they hit even 5,000, these MACDs are not going to look at I don't see it. So I think this is going to act as a shock absorber for tomorrow. Okay. I mean, if we do get some more selling and we get a deep oversold condition on the 30, let's say the 30 reverses to sell, turns down, I want to see the 30 and the 60-minute time frames get into oversold conditions, and then I'll be looking to buy them. Okay. And again, if we do get any great positive news tomorrow, for argument's sake, okay, if the spiders, let me just switch this over here to the 30-minute. Okay. So I'm hoping to see if the 30-minute time frames can get deeply oversold and get this to roll over. If we do get a big sell-off and get oversold, then I'll be a buyer, because I don't think these MACDs are going to make new lows. If some good news comes out, okay, and we rally right here, you can see the 30-minute reverses the buy, taking out, and it closes above this number. And here, 531, okay? And we get buy reversals on the 30 and the 60-minute time frames. Then I would start looking to buy the first pullback on the 15 and the second pullback on the 30-minute time frame. So that's what I expect for tomorrow, okay? Now, it can go either way, right? It can go either way. But again, it's all based upon the conditions in the market, a trend, a buy reversal, sell reversal, a correlation, and a disconnect. Those 5 based upon my 15, 30, and the 60-minute time frame. Okay? All right. That's what I expect for tomorrow. All right? When I get back, I want to tell you a story that really touched me. And I just sat last night just thinking about it. And I want to share this with you. You know, I've been doing this now over 41 years, and I've come across so many thousands of people, and I really just so blessed to have met so many thousands of people throughout the years of me doing this, and it gives me such great joy to meet new people, to learn about them, to talk to them. People tell me, yeah, don't give out your phone number. I'm like, nah, I got to talk to people. I want to hear them. I want to see if I can help them in any way. You know, but there's a person that very dear to me that I got to know recently. And he went off the rails, right? And it just touched me. And last night, I just saw my kids for a little bit, and I came here till about 11:30, about 11:30. Then I went to IHOP and had some eggs, and I went home. I was just didn't want to be around anybody. I just was just thinking about this individual. This individual was doing everything right. Because when you trade, you want to be steady. You want to hit your goals every day. Just keep hitting singles and doubles. Just keep doing enough, building your account up, trading the right patterns, right? If you're wrong, use stops, always another trade, boom. Every single day, there's so many opportunities in every name that we look at here, okay? But this person, a couple of days ago, decides to do something in the QQQs and puts a heavy, heavy position on. And I'm like, you know, we're near the lows here, and we're near the lows, and I think that the market was going to rally with about 400 or 500 points from the 10-bar moving average. And the next day, they're up 10, and they end up being up 18. S&P's hit the 5305, and then they start fading, and they get kabooshed, and they're down big. They're actually erased. The gain on the day actually were negative on the day, and the Qs were down from up 18 to down, I believe down 7 or 8. So a monster reversal. And I'm texting this person, are you okay? Are you okay? What's going on? Nothing. And then finally, he said to me, I'm done trading. And it just really ripped me to shreds, because to place a bet like that, nobody's bigger than the market, right? Now, yes, hedge funds, mutual funds, prop guys, sometimes they take positions overnight. Family offices, they try to, they're hedged in one way or another, long, short, or lean a little bit one way or the another. Hedge funds have to be involved, long, short, But as an individual, No one's bigger than the market. And to place a bet like that, well, to me, I told you, discipline comes in many forms. And it just ripped me to shreds. You know, I didn't want to talk to anybody last night. I was miserable. It just really affected me because the person is such a remarkable person. And he made a mistake. And the mistakes in this game count. Okay? You know, and I just want you to be aware, don't make these mistakes. Don't be your own worst enemy. I keep preaching to you guys all the time. I do this podcast because I want you all to be successful traders. What I do here every single day during my live stream, I empower you to be great. I teach you the knowledge I have, the ability to learn from me, the patterns, the technology, the methodology, the sequences of the trades, how these patterns are set up based upon pure mathematics. I'm making it elementary for you. Yes, it could be deemed hard for some, okay? And people have a different learning curve. Everybody learns differently, right? But the one thing I will tell you is don't make this even harder, right? Use your stops. Trade the names that you like. Trade liquid names, right? You know, if you're trading futures in volatility, widen your entries. Make sure your stops are in place. Dropping, lower your stops. Being able to identify the trades with me, learn from me, and eventually you want to be able to fish on your own. To make big bets in this type of environment is like playing Russian roulette. And I'm just telling you, you know, I'm 62 years old. This August 1st will be 42 years in the game. I'm telling you, I don't know. I've been blessed beyond. And I'm so humble and grateful. For me to do this every single day, I do this because I care. I want you to learn, and want my legacy depends on your success. So I wanted to share that with you, and it came at a cost. But I hope you all listen to this. No one's bigger than the market. And to take an opinion in this environment, okay, is something that I have to say, I hope I never have to hear that story ever again from anybody. And I pray for this person, and I hope that he's okay. And I pray that the good Lord will eventually get him enough funds to come back to trade and to be successful again. So with that being said, I want to say thank you for joining me here on The Bull, the Bear, and the Ugly. Please subscribe to my YouTube channel. Please leave a comment. I'm here at night. I always try to answer the comments. Please join my community, sktrading.live. Phenomenal community. People from all around the world joining each and every day. Follow me on my social media at official X, Instagram, and TikTok. I do not answer DMs, so anybody who thinks you're talking to me, no, you have my cell phone number, 914-500-7484. And most of all, God bless you, and God bless the United States of America. Good night, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.